Everyone keeps blaming macroeconomics or interest rates for why the market is so weak. But there is a potential $8.5 billion time bomb that no one is talking about, and it's set for the end of October. 142,000 Bitcoin. This is the final repayment deadline for Mt. Gox. Today, I'll tell you the whole truth about why this could be the trigger for a downturn in this already fragile market, and how we should view it in the long term. Some of you might be hearing the name Mt. Gox for the first time, or it might sound vaguely familiar. It was the world's largest exchange back in 2014 when it went bankrupt. The important thing is that after 10 years, this bankrupt exchange has finally started returning Bitcoin to its creditors. The scale of this is about 142,000 coins, valued at over $8 billion. For 10 years, the market has been crushed by the fear of this potential sell-off. Let's first look at the short-term risk and why this repayment could be so dangerous right now. It all comes down to timing. Currently, market sentiment is extremely fragile. When the market strength is this low, having an $8 billion supply of coins become sellable is a clear burden. We must not ignore the possibility that this could become the trigger that leads to a market-wide crash. Of course, not all creditors will sell immediately. According to a survey on Reddit, 56% said they would continue to hold. These are, in a way, the original supporters of Bitcoin who have waited for over a decade. But we need to focus on the other side, the 19% who intend to sell immediately. 19% of 142,000 is about 27,000 coins. This amount alone is enough to cause a significant short-term shock to a market that lacks liquidity like ours does right now. And you need to understand this date, October 31st, correctly. You might be thinking, won't it just get delayed again? Of course, the chance isn't 0%, but the situation is different from past delays. The Japanese yen, or JPY, repayments have already begun, and Bitcoin is also on the move. This means the process is already happening. So the possibility of a full-scale delay, like in the past, is very low. Therefore, October 31st should not be seen as the repayment start date, but as the final completion deadline for a process already underway. This is the point when all potential supply converts into actual sellable supply. There is one additional risk here, and that is Bitcoin Cash, or BCH. Creditors will also receive 143,000 Bitcoin Cash. Unlike Bitcoin, this BCH is an asset they received incidentally due to a hard fork, so their desire to hold it is likely very low. It's highly probable it will be sold immediately upon receipt. This could deliver a direct blow to the Bitcoin Cash market and further worsen investor sentiment across the entire altcoin market. However, this next part is what's truly important. What happens if the market endures this short-term volatility and absorbs all this supply? This is the long-term perspective. The biggest, oldest piece of bad news that has weighed down the crypto market for 10 years will finally be completely resolved. The market hates uncertainty more than anything. The removal of this source of uncertainty is a clear long-term positive. This will be a milestone signifying the maturation of the crypto market. It sets a precedent that the worst exchange bankruptcy of 2014, even though it took 10 years, was eventually resolved through legal procedures and assets were returned to investors. The market can now stop looking at the ghost of Mt. Gox's past and focus solely on future growth drivers, like spot ETFs and institutional investment. Furthermore, the number 142,000 itself is not as destructive as it would have been in the past, given today's market size. The market of 2014 and the market of today are incomparable. We now have tens of billions of dollars in daily trading volume, numerous institutional investors, and spot Bitcoin ETFs. The market's strength has grown to a level where it can sufficiently absorb this supply, especially if it's distributed over a year or more. Here is the conclusion. The Mt. Gox repayment has two sides. Around the final deadline of October 31st, we must be prepared and cautious about the possibility of immediate sell-offs meeting fragile market sentiment to become a short-term crash trigger. However, once that volatility passes and all the supply is absorbed by the market, we will have removed the biggest 10-year-old shackle and be able to prepare for the next phase in a much lighter state. Therefore, our strategy is clear. In the short term, we must focus on risk management in preparation for the volatility at the end of October. But we must not get swept up in this short-term fear and lose sight of the long-term positive, the resolution of the biggest uncertainty in a decade